Welcome, everyone, to Benzinga All Access, leading into Benzinga Live here this morning. It's Michael Murray with Benzinga. I'm here with Aaron Bree, my co-host, and he's going to take us through some top news headlines. Before we get everything rolling and we bring out our company, we've got a very exciting guest for today, CNTX Therapeutics. But before we get things going, we've got our usual slate of all access things to run through. First and foremost, we've got the giveaway going today. We have two $50 giveaways we're going to be giving to two people who fill out the link in the description in the YouTube video below. So fill that out. We're going to pick two random winners, $50, and we will send that out. We'll announce the winners during Benzinga Live. Before we get everything else rolling, we want to thank our sponsor, Ticker, for the All Access show. We have an intro for Ticker to explain who they are and what they do. We're going to roll that, and then we'll get into the top news headlines and the rest of All Access.
What is Ticker? That's right, Ticker with two I's, just like you. Because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
Fantastic. And of course, you can get involved with Ticker at ticker.com. Aaron Bree, take us through some news headlines. What we've been seeing before we get into All Access here, we've seen kind of a recovery and a bounce back in the markets so far this week. What kind of headlines have we seen, and what's the market looking like in general right now?
Yeah, well, really, like you said, Mike, a strong week that, we've been leading into this, right? It's been a strong week. And what's really been a strong past couple months, really, since those June bottoms around June 16th, June 17th. We've had the markets come back a lot since then. A lot of different things driving that, mainly inflation looking like it's finally starting to slow down or come down. A big debate going on Twitter about what the actual inflation percentage was in the month of July. But either way, the thing that the market cares about is that prices were not going up in the month of July. And we saw that in this Wednesday's CPI report a couple days ago. And then we also got the PPI, which is the more wholesale inflation number yesterday. Today, even more economic data coming out. So we have pretty close to us here in Detroit. We have the University Michigan consumer sentiment that comes out every month. And I don't know why, honestly, Michael, people care about this so much. Basically, they just poll people at University of Michigan about, their sentiment on are you spending money? How do you feel? And a couple months ago, that was at the lowest point. That sentiment survey was at the lowest point that it had been in 2 years. And today, this morning, the consumer sentiment came in higher than the expectations. The FactSet consensus estimate was 52.3, came in at 55.1 compared to July's 51.5. So, Michael, basically all that sentiment survey is saying is that from July to now, people are feeling better about the economy. People are feeling better about spending their money in the economy. And then when you, when you have that in addition to the lower CPI number, in addition to the good jobs number, it makes sense why the market's been up so much the past couple of weeks.
And it feels good too, right? I think, like you said, everybody's been kind of leaning into this and ready for a market bounce back. But with all the positive news coming out, again, we have a weekly interview with Anne-Marie Ban. She's the CEO of thetradingbook.com, and she takes us through the weekly news headlines, talks through a couple of potential trades. If we're looking at, some of the stuff that Anne-Marie talked about yesterday, and we talked about, the U of M report and everything else, what are we looking at in terms of like the second half of the year with the consumers feeling stronger, the U of M sentiment report coming out feeling better? The second half of the year, does it feel like we're kind of starting to see a turnaround here? Are we getting to like a better place in the markets? Obviously, we've had a rough first half of the year. Are we going to start to turn that around?
Yeah, I mean, that there is a lot of, recession talk that I think has kind of, people aren't saying that word as much right now because it's hard to, recession doesn't really go with adding 500,000 jobs in the month of July and zero inflation, right? There's no recession you can find in history where, you're adding jobs and inflation's not going up. So, I think the key will be to be looking at that data, seeing if that remains the case. Obviously, Michael, if I had a crystal ball and could tell you what's going to happen in the second half of the year, I probably wouldn't be sitting up here with you today. I'd be in the Cayman Islands somewhere or something. But, I wouldn't be surprised looking at the market now. We're on the NASDAQ composite. We're up more than 20% off the lows. I wouldn't be surprised to see some sort of pullback from here, 5-10%. I would be surprised if we, came back and retested those lows in June. I think for the market to go back down like that, we would have to have some, big, macro headlines, another war in Europe or something going on. So as long as outside of things like that, if the economy keeps going in the direction it's going, then I'm feeling pretty good about the market.
Okay. I mean, I'll take that all day. I mean, in potential trades, like working through that, is there any trades you're looking for on your Robinhood this morning? Anything you're going to trade this afternoon?
Well, one stock that I've been watching today that I'm always watching because it's the stock that I own the most of is Apple. And Apple's just been an absolute monster. I mean, it always has been one of the best stocks of all time. You look at the stock chart. But really the past, and here, oh, actually, I won't be able to share my screen. But I mean, just the past, 6 weeks or so. All good. Apple right now, Michael, to put it into perspective, Apple right now is about $3. No, sorry, about $8 off its all-time highs of around 180. We're at 170 right now. So Apple is actually a lot closer to its all-time highs than the overall market. So that's telling me that Apple is showing relative strength against the overall market, right? If the S&P 500 and the Qs are still well off their highs, but Apple's already gotten back to their highs, that's showing me that investors are going out there willing to buy Apple more ahead of other stocks or the overall indices.
Got it. Yeah, that makes a lot of sense. I mean, we're seeing some strength in the markets. And again, I think that with the consumer being such a good read of that, it feels like the sentiment is starting to turn around a little bit. And again, I mean, obviously there's a lot of trades to be made out there, but the markets are still choppy. So caution, I feel like, is still essential, right? When you're getting back in, you might see this pull down from the recent strength that we've had. So you got to be careful before jumping into the markets too and throwing it all on red and just taking advantage of a bounce back too.
Yeah, and I mean, I that's typically what you see happen in market cycles is that, once the market goes up a certain amount, then people see that and they, get their FOMO and they go and start to buy it. And then, right, when that happens, then you get that pullback. So certainly, like I said, I can foresee a 5-10% pullback from here. I'd be shocked if we went back and retested those lows. Again, I don't have a crystal ball and this is not financial advice. But yeah, I mean, the sentiment, like you said, has been changing slightly, although this was last week. I haven't checked this week. Last week, the short interest on the S&P 500, so more people were shorting the S&P than any time in the last 2 years. You had to go back to like COVID when you had that short interest. So there are still a lot of bears out there. Basically, people looking at the market saying, I don't think we should have gone up this much, whatever. I still think we're heading toward a recession. So there are people out there still short. I'm not though.
Okay. Well, hey, you know what? I'll take you are definitely my barometer of the markets when we come on here and do pre-headline checks. So I'll take that all day. I'm excited about it. Anything else in the headlines we should be watching out for over the weekend? Anything that's kind of brewing we should be looking for Monday morning when we open back up?
Not off the top of my head, Michael, honestly. I think we're kind of getting to this point where we're getting out of earnings season. There's not going to be as many big earnings reports next week. So I don't know. I mean, as far as headlines over the weekend, I think the things that people are looking at right now, of course, you still have the war going on in Russia and Ukraine. You have energy crises kind of popping up all throughout Europe. So certainly there, is something that a lot of people are looking towards, seeing kind of what the situation is in Europe. Different countries, Germany, France, are having different issues in dealing with the supply chain or the supply shortage from the Russia-Ukraine war, right? Because they all decided, hey, we're gonna stop taking in Russian gas, and they're trying to meet that demand in other places. So, yeah, I mean, we'll keep watching the news this weekend, Michael, and we'll let you know.
Sounds good. All right, we're going to keep an eye on the news. Obviously, thank you to Aaron Bree for always for the headline checks, and we're going to bring him back on here as we transition into Benzinga Live. But we're going to go ahead and move into Benzinga All Access. Again, very exciting company that we're bringing on today. We're going to bring on Martin Lehr, the co-founder and CEO of Context Therapeutics, and go ahead and move into All Access. Let's bring him on. Hey, thank you so much for joining us, Martin. How you doing?
Hey, Mike. Pleasure. Doing great.
Great to have you here. Great to have Context on the show. We've got a lot to talk about today and a lot to discuss with you. But let's start off with a brief overview for anybody in our audience who hasn't heard of Context before. Give us an overview of the company and what you guys do.
Absolutely. Context is a publicly traded company on NASDAQ. Our ticker is CNTX. We are a development stage, so we're a clinical stage biopharmaceutical company that is focused on advancing medicines for female cancers. Within that, that means we're focused on breast, ovarian, and endometrial cancer. These are unfortunately large markets. I say unfortunately because that means there are many women living globally with these cancers. There are certainly treatments that are available for the cancers, but we think that there is a significant medical unmet need to develop new, better treatments to allow these women to live longer and to live high quality of life while doing so. Context has two programs that we're developing. One is ONA-XR. It's an oral progesterone receptor antagonist. That's the subject of 4 ongoing phase 2 trials, soon to be a 5th clinical trial that we announced in partnership with a large multinational pharmaceutical company called Menarini Group last week, as well as advancing a preclinical bispecific antibody. And we just announced earnings last evening. And the important note there is we're well capitalized. We have cash into the 4th quarter of 2023. I'm really excited to be here and tell folks and your viewers more about our story.
Awesome. Well, we're very, very excited to hear more about that story. And let's talk about some recent news, too, and what you guys have been up to. There's no doubt Context has been a very hot name, especially in the retail investor market recently. Give us a high-level overview. Obviously, you've told us what the company does, but give us a brief look into why retail investors and individual investors should be so excited about the future in the next 1 to 2 years and beyond that for Context as well.
Yeah, it's been a good couple of months for us. So over the last 3 months, so basically since the end of April, our stock is up over 30%. So it's been a good run for the company. As we look to the balance of the year, so basically from mid-August through December 31st, it's going to be a catalyst-rich time for our company. We have 3 different clinical trials: a breast cancer, an endometrial cancer, and an ovarian cancer trial that will all flip data cards for preliminary data. And that would be again in the 4th quarter, which is right around the corner. We also will announce a development candidate. So that is the drug that you will proceed into human trials with for our preclinical bispecific antibody. And then lastly, we're starting a 5th clinical trial in partnership with the Menarini Group. So 5 different catalysts in the 4th quarter. And so certainly we've had a lot of momentum in the stock over the summer, and we're looking forward to continuing that through the end of the year and beyond.
Awesome. Okay, and you mentioned briefly, too, the clinical drug pipeline that you guys are working on. Tell us a little bit more about what's in the pipeline for Context. What's most significant coming down the line in the next couple of months here?
So certainly like our catalyst that I just mentioned will be the huge drivers for the stock. But stepping back, why should one be interested in those assets in the first place? I think we have 2 tremendous programs in our pipeline. They, while both addressing female cancers, are very different in approaches. Our clinical stage program, ONA-XR, is an oral progesterone receptor antagonist. So it's a simple pill women take at morning or at night that we're developing across a range of these female cancers. And that drug's been in well over 150 patients to date. So that is, in my mind, a fairly de-risked drug, one that we hope will generate sufficiently strong data in phase 2 to underwrite future phase 3 trials, which are really around the corner. In the case of our preclinical bispecific antibody program, that's a biologic, so that will ultimately be an IV or infused product, either once or twice, once a week or every other week down the line. And that's a unique biological approach where we're combining precision medicine and immunotherapy. So precision medicine selectively targeting a protein called Claudin-6 that's only expressed on cancer cells. And those cancer cells extend not just to female cancers, but also to lung, gastric, and testicular cancer. So a very broad use case for the drug. And what we're doing is we're selectively targeting Claudin-6 and then activating the immune system to get the immune system to attack these cancer cells that express our target. So in some sense, it's guided or precision medicine in that we're taking our immune cells and directing them specifically to a target. So stepping back again, 2 programs in the pipeline. One is ONA-XR, the other is Claudin-6. One's a pill, one's a biologic, but both targeting female cancers potentially and beyond. So really excited about those programs. That is the core focus for the company. And again, both programs, whether it be ONA-XR or Claudin-6, will be delivering substantial data towards the latter half of this year of 2022.
Understood. Okay, I think you said it really well earlier. When we're talking about ONA-XR, regrettably, unfortunately, these are very large markets, right? And obviously, it's something that's a sad fact of our current world, but you guys are working to address these issues that we have. When you look at this, not only from the fact that you guys are working on a product that's going to save lives and increase quality of life, when you look at things from in terms of a market opportunity here with how large this opportunity is, and again, knowing that this is a regrettable opportunity as it is, but you guys are working to fix it, where do you see this going in terms of profitability and a market opportunity for the company in the future?
Yeah, biotech is one of those interesting industries where the better the patient outcome, the more profit a company theoretically makes. And so I think it's something where the company and the patient, the clinician, are extremely well aligned. And certainly our team at the company is mission driven in helping these women. So as we look at these markets, I think breast cancer is an exemplary cancer in this regard. In any time in the United States, there's well over 100,000 women living with metastatic disease. There are well over 250,000, maybe above 1 million women being treated in the adjuvant setting, and 250,000 women are diagnosed per year with breast cancer. And so that is a massive funnel for which we can draw upon to recruit patients for our trials and to advance the development of our drug. And again, our goal for these women and with our drugs is to extend their life and provide them with a real high quality of life. So the typical side effects associated with chemotherapy and other drugs such as hair loss, severe fatigue, skin discoloration, various neural disturbances, like having a foggy brain. We are endeavoring to develop these drugs so that they don't have those side effects, or if they do, they're at such a level that they're basically insignificant as far as impacting the patient's daily life. So we have a steep hill to climb in front of us. It's a righteous goal to attain, and I think between our team, our cash resources, and our assets, we're exceedingly well positioned to climb that hill and have an impact on these cancers.
Got it. Okay, let's talk a little bit about climbing that hill, right? And some of the challenges in front of you, but what you're also working on. I want to talk a little bit about the Claudin-6 program too. Can you give us some details as to what that is and why that's so significant moving forward?
Yeah, so this is a science geek thing, Mike, right? So I started my career as a researcher at Sloan Kettering, then went to a venture capital fund. So I've spent it always in oncology. And Claudin-6 may be the coolest drug target I've ever looked at. It's what's referred to as an oncofetal protein. So it's a protein that's required for the development of the fetus. But then after birth, and certainly in adulthood, we don't need that protein anymore. So for you and I, Mike, we don't have Claudin-6 in our bodies. But for reasons we don't particularly understand, certain cancers express very high levels of Claudin-6. For example, almost every testicular cancer patient will have Claudin-6. About a third or more of gynecologic cancer patients will have Claudin-6. About 15% or so of lung cancer patients. So this is a protein that rears its ugly head in those cancers. Our understanding is it doesn't do much of anything in those cancers, but it's there. And that's what we need from a development standpoint. So by using a bispecific antibody, we're using Claudin-6 as a targeting mechanism, almost like an anchor, so that we can bring cytotoxic T cells, the immune system, in close proximity to that Claudin-6 positive cancer cell to kill it. So you think about all these different ways drugs are created: pills, biologics, cell therapies. What we're trying to do is optimize the therapeutic window. how much efficacy can we push without having a horrible side effect? And because Claudin-6 is only in the cancer cells, we have a highly selective antibody, and we're only bringing the immune cells, hopefully, in proximity to that cancer cell. You can have a tremendous therapeutic effect without significant toxicity, and that's sort of the holy grail. Claudin-6 is also very hard to develop an antibody against. There's a bunch of structural challenges with it. And so for us as a small company, we wanted a protein that had technical challenges, right? We didn't want every company under the sun to be able to develop a drug against it. We're in rarefied air as far as companies pursuing Claudin-6. We're joined by companies like BioNTech, which has the most advanced program against Claudin-6, and Amgen, among others. So we think we're swimming with the best and the smartest, and we may over time have what we believe to be the best mousetrap to pursuing Claudin-6 in our bispecific antibody.
Awesome. And you talked about swimming with the best and the smartest there too. I want to talk a little bit about outside validation and what that feels like for the company. The Menarini Group, I know you guys have partnered with them. That's a partnership for you guys that came up recently. How does it feel to have companies like that working with you guys and understanding what you're doing? And do you feel like the outside space around Context is understanding the potential that you guys have here, but also the work that you're trying to do? What do you think the general market sentiment is?
Yeah, it's been interesting for us. So we felt that the Menarini deal was critical to us. First and foremost, it expands the use case for our drug. So by partnering with Menarini, combining their drug with our drug, their drug being elacestrant, the net present value of our asset went up. And I think a good example of that is a bank covering us increased their price target based upon the expansion of the market potential through the combination of those two agents. Menarini is really at the forefront of developing a new class of anti-estrogens, the oral estrogen receptor degraders, or oral SERDs as they're referred to. Menarini has the most advanced drug in elacestrant. It has a PDUFA date, which is the potential approval of the drug in February. And so we were really excited to partner with the company at the leading edge of breast cancer development. Menarini, for those of you who are not familiar with them, is a private Italian pharmaceutical company, not so small. So they have over 17,000 employees. Based upon public documents, they did over $4 billion last year of revenue. And so if you ascribe kind of a standard industry multiple of a 5 to 8x revenue, you're looking at a very substantial company for which we partnered. The other critical thing is Menarini is new to the oncology space. They've historically been a primary care company. And so in 2019, they acquired their first oncology company, a company called Stemline Therapeutics out of New York City, for over $700 million in cash. So what we love about them is they are very committed to building oncology. They are doing it through acquisitions and licenses. And so we have a potential partner with which to work with. The other thing that's really exciting about us with Menarini is as they build their oncology franchise, they've really brought in tremendous industry professionals, people with 20, 30, in some cases 40 years experience in breast cancer, having worked for a who's who of pharmaceutical companies. So we think we're really working with the best, smartest people, company, and they have the leading asset in our field. So a tremendous opportunity for patients and certainly for our investors.
No doubt. And I want to talk about the cash position of the company and everything and the investors in a little bit as well. But let's start moving in that direction. Let's talk about the Q2 earnings report that came out yesterday. Take us through some of the highlights there. What were the standouts in that report?
Yeah, so what we noted was the Menarini partnership completion, that our cash balance is about $43 million. We're a small semi-virtual company, so that actually funds us for a fairly long period of time into the fourth quarter of next year of 2023. We provided guidance that 3 of our clinical trials will have a preliminary update in the fourth quarter, and that will formally nominate a development candidate in the same quarter for our Claudin-6 program. So really, when I step back and look at the progress of the company since our IPO in October of 21, so about 10 months ago, I see a company that has really executed against that plan that was outlined in our S1. We've done it within budget and have positioned the company despite significant market turmoil in the growth stock space over the last 6 to 9 months. That we're really well positioned to come out of that maybe even stronger than we were at the time of our IPO. And so hopefully that was conveyed to followers of the company, and certainly hopefully it for people who've been tracking the company, were not yet shareholders, provided enough intrigue for them to jump in and join us in this endeavor.
Absolutely. And I want to talk a little bit about that too. You mentioned in the report that your cash and cash equivalents should be enough to suffice until the end of the fourth quarter of 2023. So you're clearly in a good position here. Can you take us through some of the factors that have led you to be in a good spot with your cash position as of now?
Yeah, absolutely. So we were lucky in the fourth quarter of last year of 21 to do 2 financings, an IPO and a PIPE, that had gross proceeds of about $60 million. And so that really put us on strong financial footing. Certainly when we did those financings, we didn't expect the stock market sell-off to accelerate through the winter, but it's tremendous to have cash at a time of market uncertainty. And so we're really strongly positioned to see our major inflection points as a company. Again, those 3 clinical trials, the nomination and development candidate for Claudin-6 through the back end. And then since the IPO, we've had 2 catalysts for the company that we had outlined in the S1 and came through in practice. The first, in December, we presented clinical data at a major conference, the San Antonio Breast Cancer Symposium, where we showed that our drug, ONA XR, performed as expected in a window of opportunity trial in women with primary breast cancer. And so we showed in that trial that patients that express high levels of our target progesterone responded favorably to our drug, and that various genetic changes associated with favorable long-term outcomes for patients were positively affected by our drug. So it was a really exciting data set. That was followed in April of this year, where we presented 5 presentations, 4 posters, and 1 oral presentation at the American Association for Cancer Research, AACR, in New Orleans. And so we had several tremendous presentations, and then followed that up with an investor R&D webinar where those academic investigators, those weren't trials actually run by the company, they were run by academics from such prestigious institutions as the Mayo Clinic. And they presented that data, and we made that webinar available in PDF form as well as on our YouTube channel. And so that was incredibly well received. It was a real boon for our stock. And so what we want to do, and we'll continue to do as a company, is set aggressive milestones, and with some luck, continue our streak of meeting those milestones and delivering high contrast data on time and within budget for investors.
Terrific. Okay, that's the question I want to close us out with too. Looking at the biotech space as a whole, especially the first half of this year, it's been a brutal year in the biotech sector, as I'm sure you're well aware. The second half of the year as we move forward here, how is Context planning to address the next few months? How are you guys going to react to the market around you? And what are the biggest milestones for the company as you move into the rest of 2022?
Yeah, I mean, it's been an interesting year. So we're up 50% from our market bottom, and we think there's a lot more room to run for the stock and for the company. And the reason we believe that is fundamentally, we're not going to tie ourselves to the market, and cross our fingers and toes that the market and sentiment will improve and that will somehow lift our stock. We think that's a fool's errand. We want to control our own destiny. We have the cash to do that. And so what we're going to do is execute on our trials, present data from 3 of them in the fourth quarter, and then present the findings and the first public findings of what our development candidate looks like for Claudin-6 and how that potentially stacks up against Amgen and BioNTech. So it's going to be a really exciting time for the company. No one can predict how the market will fare over time, but what we can control is operational excellence, executing against our timelines and budget and deliverables, and we will continue to do that for investors.
Amazing. Martin Lehr, the co-founder and CEO of Context Therapeutics. It's been an absolute pleasure having you on today. Hopefully we get you back on All Access soon, but thank you so much for joining us to talk about the mission of the company and what's coming forward. Looking forward to seeing what's next.
Appreciate it, Mike. Be well now.
Thank you, Martin Lehr, co-founder and CEO of Context. Great to have CNTX on the show. Obviously, we still have a couple of things to wrap up here before we transition back to Aaron Bree, who's back in the studio and about to take us into Benzinga Live. But a couple of things to call out. Aaron, we had an astonishingly low number of people sign up for the giveaway last week. I think it was like 5.
Oh, wow.
So I mean, that means we gave away $150 last week, which means if you filled out a form, you had a 1 in 5 chance of winning $150.
That's 20%.
That's 20%. I mean, that's really good. In terms of percentages, that's outstanding. So listen, I would encourage everybody to get to the link, fill out that form. We're doing 2 $50 giveaways this week. We're going to switch it up again next week. We're going to try a couple of different ways of doing this, but we're doing a giveaway every single week. So if your chances are 1 in 5, I mean, you really have nothing to lose. It takes like 6 seconds to fill out the form. So, I mean, per hour, you're making, I don't even know how many dollars. That's great.
Yeah, you don't even have to pay to enter anything. It's like you're not going to get those odds anywhere else.
No, it's unbelievable. So anyway, fill out the link in the description below. We're doing 2 $50 giveaways this week. And of course, before we wrap and transition into Benzinga Live, we want to thank the companies that participate in All Access every single week. And of course, our sponsor for All Access, Ticker, which we're going to run the video for one more time. You can get involved at ticker.com, but we'll play that and then move into the rest of today's show.
What is Ticker? That's right, Ticker with 2 I's, just like you. Because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
Alrighty, everyone. Let's go ahead. That link should be in the description to sign up for the giveaway. We'll go ahead and drop it in the chat if not. But let's go ahead and transition into Benzinga Live. So this is your first time with us. Basically, Benzinga Live is our midday show from about 11:30 a.m. Eastern to 1 p.m., an hour and a half each day where we break down the biggest stories in the market, different trade ideas, and everything you need to be watching. So bringing on good interviews and some experts as well. In about 15 minutes, my good friend Nick Brown, News by Nick on Twitter, will join us, talk about what he's been watching. But yeah, guys, as always, drop any tickers, any trades in the chat that y'all are looking at, and we'll take a look. Let me go ahead and pull up my Benzinga Pro real quick. It does look like we're seeing kind of maybe at least the Qs is what I've been watching come down a little bit. All right, guys, hold on. It's going to take me a second to get my screen shared. All right, shows. Yeah, guys, really, I've been watching Apple today, like I said, showing a lot of strength. Really? All right, hold on. I'm getting a note from my producer that I screwed up. Oh, it's because I was looking for one that was live, and it wouldn't have been live from... Sorry, guys, just dealing with a little technical difficulty on the back end. Should be good to go here in about a minute on the screen share. All right. Oh. Oh, all right. Found it. Thank you, AT. All right, guys. Sorry about that. We're good to go now. All righty. All right, so we still got Apple pulled up here. We're looking at a 5-minute chart here because I'm really curious kind of what's going on intraday. And then we can take a look at a longer time frame if folks would like. But you can see here we got this red candle kind of coming down off here. If you're trading Apple, I mean, I would maybe wait to see if we can test this level right here at 170. Maybe buy some on the upswing because I mean, look at this. I mean, this is still in an uptrend. Just because you're having this come down a little bit. Right, we talk about this all the time. Nothing goes straight up. You're going to have little pullbacks on the way up. I would still be buying this into strength rather than trying to sell it and call a top. You know, I mean, the trend is your friend. The trend here should be pretty obvious in Apple, right? I mean, zooming in, that's as clear as you can get. I have been, saying I don't think we're going to see a V-shaped recovery. Well, at least Apple, it's looking like we are seeing a V-shaped recovery. A couple other stocks, Tesla, it was coming up. Tesla's actually, compared to Apple and some of the market, Tesla today is having a strong day. But yeah, pretty similar to the Qs overall chart right here. So this is the Qs on a daily. You can see we're still well off our highs, right? 408 to 328. And I was talking to a buddy yesterday who's in the industry in finance and investing, and basically the idea, or it brought up kind of comparing today's environment to the 2000s of the dot-com bubble crash. And I think there was a time, maybe back here more in like November, December 21, when valuations did get to a point where they were like higher than at any point since the dot-com bubble crash. But I mean, since then, right, we saw this is the Qs, NASDAQ 100, go from 410 to 270, right? I mean, that's a significant drawdown. That's I want to say something like 35%. Let's see. 33%. Which I don't think that was the case in the 2000s from the peak to the low. Yeah, I mean, that thing dropped like 80%. So it was a lot different. I don't know if you can how well you can really compare the environments. I don't know, like the way, I mean, take something like Netflix into account, right? We saw Netflix go from 700 to 150, right? Netflix's stock dropped, let's see. Netflix's stock dropped from its peak to its low 75%. And I think that's pretty in line with what you saw with a lot of the dot-com companies when you saw those valuations get crushed, right? The dot-com companies in the early 2000s that survived, right? Like the good ones, the Amazons, whatever. Maybe a couple of them dropped a little bit more than 75%, maybe 85% or whatever. But to me, right now, the valuations, at least from the tech standpoint, and we'll go back to the Qs here where we are, has gotten to the point where, like, I really do think are reasonable. Right here is fine, right? If we go back to Apple's PE is, right, if we go to their forward PE is 26. It's expensive. It's higher than the S&P average. But historically for Apple, or historically for stocks, especially that grow like Apple, that's not that expensive. So, we just need to, keep watching. I said earlier, I wouldn't be surprised if we do see some sort of a pullback. Although I don't know what that really, entails for if we do get a pullback, like I'm still going to be putting money into the market every 2 weeks when I get my paycheck. I'm not going to go short or anything. It just doesn't seem like this is the environment really. Like, I mean, I guess right now, and I think a lot of hedge funds and institutions actually do have some short interest right now because they are expecting a pullback or growth to continue to be slow, or the Fed to not pivot. But I think for the most part, a lot of people are getting now to that point where if they're not FOMO buying now, they're getting to the point where they're close, where they're seeing the market seemingly up every single day, and saying, oh man, I need to get in on this. Like I need to go in and buy it. And then usually when that happens, when you have retail start buying after the market's been up for a little bit, that's when you get the next pull down. But, I mean, this year, and I'll try to find this data real quick, but this year we're on pace to break the record for most purchases for like equities among individual investors, right? So that's showing that while the markets were down, retail investors were still buying the dip. They were still plowing money into ETFs, and we saw that investor behavior kind of change over the past year and a half, right? During COVID, people were much more speculated on individual names, your GameStops, your AMCs, different SPAC plays, whatever it was, whatever the hot stock that day was that people were talking about, that's what people were trading. And then once we got the market downturn, I think a lot of those stocks ended up, going down more than maybe the overall market. So this time around, retail investors were buying more ETFs, more kind of like conservative, safer investments that are seemingly long-term investments, not a quick trade like you're going to buy, GameStop or AMC to hold for a few days, right? If you buy the S&P 500, chances are you're gonna, want to hold that for a while. I really do think right now, I'm bullish. I'm buying. Personally, I mean, I like I said, I wouldn't be surprised to see a pullback from here. If that happens, hey, I'm still bullish. I don't see a scenario without any big macro headwinds, i.e., things happening in Russia and Ukraine or China or whatever. Without anything like that happening, I don't see us testing those June lows. But we shall see. I mean, there are certainly people out there calling for here. I'll do this. I mean, because I like to. Always view opposing viewpoints, right? Like if I'm only viewing things that corroborate my beliefs, then it's not going to help me be a better trader and investor. So there are people out there right now that are very bearish, and I want to know why they're bearish. Like I want to, in my mind. Oh shoot! All right, here, let's see if we can get. All right, I'm going on Twitter real quick because there are a few people out here that are still very bearish that I'm seeing on Twitter and stuff, and that supposedly, are portfolio managers or running funds, but I don't know. I just like it feels like if you've been short over the past 2 weeks or whatever, then you've gotten crushed. Yeah, Michael Burry here. I'll share this on Twitter. I just saw this. So the one guy that I was thinking of on Twitter that I was gonna share, I follow him on my personal Twitter, and I think his account is locked. And on my thing that I can share, I'm only on the Benzinga Twitter. But this is from Michael Burry. NASDAQ now up 23% off its low. Congratulations. We now have the average bear market rally across 26 bear market rallies from 1929, 32, and 2000 and 2002. The average is 23%. After 2000, there were two 40% bear market rallies and one 50% rally before the market bottomed. So, I mean, honestly, what this is telling me is, I honestly don't really understand that. Like I don't know, Michael Burry's kind of been one of those guys that got right, once and has been wrong a lot of times subsequently, but is still a big name. So people still, care what he has to say. But think about this. After 2000, so I assume this is going to, include the .com bubble crash, and then 2008, and then COVID. Like, what other bear markets are there? There were two 40% and one 50%. I didn't think of three bear markets in that time frame since 2000. .com, 07, 08, COVID. I don't think we ever hit bear market territory in the 2018 sell-off. I think SPY went down about like 15% or so. But like, if that's the case, then you're saying every single time we've gotten a bear market rally, it's gone up 40 or 50% in the last 22 years? Because that seems like that's good info to know. So thought that was interesting. We put a poll out from our Twitter yesterday. Basically just asking. We put another poll out today. But Burger King or McDonald's? That's an obvious one, right? People aren't going to. Not going to I would not have put money on Burger King to win that poll. But I put a poll out yesterday basically just asking investors if they're bullish or bearish. And it is more bulls than bears, but it's pretty flat, right? 54% to 45%. So if you're thinking like, oh, I need to be short because everyone's bullish and people are FOMO buying right now, I don't really think that's the case. I don't think it's the case yet that we've gotten to that cycle or gotten to that point in the market where, you know, we're euphoric and people are FOMO buying. You know, I think this is proving that, right? That there's still a lot of bears out there. And I mentioned that yesterday. The short interest on the S&P 500 is at its highest point, or it was on August 6th, at its highest point at any time in the past 2 years. So people are still short out there. People aren't buying this rally. We'll go back to my Benzinga Pro. Check out any stocks you guys want to throw out there in the chat. Michael Burry blocked you, Jonathan Lovelace. What'd you say? I mean, so Jonathan, Jonathan Lovelace in the chat saying, I'm bearish because the market is fraudulent again. The data they feed you is a lie. So I guess ultimately because I don't trust people. So I hear you, and I hear that, you know, a decent amount from different people. But like, if you're saying all data points are fake and none of these numbers, and then like, what can you go off of? Like, what can, you know, and I hear that with CPI all the time, where they're like, oh, the CPI's number is fake. Really, inflation's way higher than that. I'm like, okay, well, if inflation's way higher than that, then what is it? What's your way of measuring it? Right. So like, if I don't know, like I don't really agree with that, Jonathan Lovelace. Just the fact that, all the numbers they're feeding you are fake. I don't even know what numbers you're talking about. Whether you're talking about the CPI, I assume you're talking about the numbers that are coming from the, you know, more from the government in terms of job numbers, CPI. Those things, and not the actual numbers from the companies. But honestly, the market cares more about, well, the market cares about the Fed than the Fed's policy, obviously, and the CPI is going to go into that. But the market cares, I think, almost more about what numbers the companies are reporting. You know, if it's expected across the board that revenues and EPSs are going to drop in the next quarter, the market's going to go down. It's not going to matter what numbers, you know, they're feeding you from the government or whatever. So, again, I understand it. I'm not saying, you know, that's, I don't know. I'm just basically saying you can decide that the numbers aren't, you know, legit if you want, but hey. He and I don't agree on social issues, Jonathan Lovelace is saying. All right, Hazem wants to look at HLBZ, Hellbiz. This is a mobility. They make like the scooters and bikes for cities. So if you want to like rent a little electronic scooter to go somewhere, that's what Hellbiz does. Find out right here in Benzinga Pro, pro.benzinga.com for your free 2-week trial. Really everything you need for trading and investing in one spot. Hellbiz provides electric micro-mobility services. The company offers a diverse fleet of vehicles, including e-scooters, e-bicycles, e-mopeds, all in one convenient, user-friendly platform. This one was one, the only thing I know about this stock is I remember when it went freaking bonkers. Yeah, we can see that there on the chart. Do it daily. This thing got up to $40. It's trading at 132 right now. I mean, so here's the thing: is we went from 72 up to 2. So almost, you know, you were up almost 200% in 2 days. I think typically, so I have a saying where I'm like, if I see something up 100% randomly, I'd rather bet that it's going to go up another 100% than that it's going to come straight down. But when you have a stock that goes up like 200, 300% in a couple days, typically what happens is that's followed by a sell-off. Now, does Hellbiz give up all these gains and come back to here? I don't know. I don't really know a lot about this business. I don't know if there was anything going into this move other than, you know, people pumping it or what. I will say, I mean, I think, you know, I mean, this is a tiny company. It's a $60 million market cap company. You know, it's a $1.32 stock. I don't really know a lot about the company. I don't think there's enough financials or reported quarters from the company to really have a good idea. But if you love the company and you have a thesis and a growth thesis on it, and you think, this thing's really going to grow over the next, it's a $1.32. Buy a couple hundred shares. You can buy 500 shares for, $650. And then guess what? If Hellbiz goes to $20, you've made a lot of money. So if you love it, buy a few shares and hold it for the long term. But I could see this thing going down. So I mean, look, we were trading at right in this range, 50 cents, but boom, 70 cents up to $3. So I wouldn't be surprised to see this come back down from, $1.30 down to $1 here maybe, and then you start to come back up again. So let's see. I know. Brian Blockchain saying, if you don't believe the government CPI, check out Trueflation or real-time CPI. That's about 5 months ahead of CPI. How would I don't understand, I guess, how they would calculate what inflation is going to be in 5 months, right? Like 5 months ago, were they calculating that gas prices were going to drop every day for 50 days? Or are they just like making their best guess based on current price trends? What does the Trueflation for the US say? Whoever dropped that in there, Brian Blockchain. Yeah, Shelly, CPI is not the only inflation indicator. There's a lot of inflation indicators out there. CPI is the one that's talked about the most, though. All right, guys, I do see our first guest hanging out in the background. I've got my boy Nicholas Brown, News by Nick on Twitter. He's been on probably his, I guess, 5th time in the past 3 weeks. But if it's your first time here, Nick, great kid. He's about 16 years old. Posting news on Twitter all day, every day. He's got more than 5,000 followers, beating me on Twitter. But always great to get Nick on the show. So without further ado, let's go ahead and give him our special intro and bring him on the show. Mr. Nick, how you doing today?
I'm good. How are you?
Oh, wait, hold on. Sorry, I couldn't hear. I got to get my headset on. 1 second. Oh, here we go.
I'm good. How are you?
Great.
Well, it's Friday. We made it to the end of the week.
We did indeed. And I know, this week has been, obviously it's been a good week for stocks. I mean, today's been good so far. Let me check, make sure we haven't, had any crazy sell-offs or anything. I don't want to say Qs are still up over 1%. We're chilling. We've had this week a pretty busy back end of the week in terms of different economic data points coming out, right? I mentioned on Saturday. Well, I'm thinking about the weekend already. On Wednesday, you had the CPI. On Thursday, you had the PPI. This morning, we had the UMich consumer sentiment. What's been, what have you been following? What have you been watching the most?
So PPI came in lighter than expected, which was good news. And so yesterday was kind of an interesting day. We saw futures jump. I don't want to say jump, but we saw them relatively green after the numbers come out. And then as we headed throughout the day, we just got a little fizzle. I don't want to say we had a big, massive sell-off because we really didn't. S&P basically closed flat, down 3 or 4 points. So yesterday it was just, I think we were getting a little bit overjoyous. And so I think traders and investors pulled back just a little bit and they fizzled. They sold just a little bit, but today we're up once again because I think some of the University of Michigan prelim inflation numbers actually show some good news. Over the 1 year, so these are prelim for August, and we'll get final reads towards the end of the month as we head into September. But 1 year inflation came in at 5.7 or 5%. Estimate was for 5%. Previous was 5.2%. But the 5 to 10 year inflation ticked up 0.1%. It came in at 3%. Estimate was for 2.8%. Previous was for 2.9%. I do actually have an explanation why maybe inflation expectations over the 5 to 10 year actually ticked up. because when the House passes the Inflation Reduction Act today, I don't even know why we're calling it the Inflation Reduction Act, because CBO many people come out saying it's not reducing inflation. So let me just go there. I don't know why we're calling it the Inflation Reduction Act, because it's really not reducing inflation. But a lot of these policies don't kick in until 2026, 2027. So I think maybe that's why inflation ticked up a little bit for the 5 to 10 year. I could be right. I could be wrong. Just a little bit of explanation for a few people few people that are being confused for that number.
Yeah. And where, so was that part of the UMich consumer sentiment, the estimates for the inflation?
Yeah. So normally consumer sentiment actually beat, and I do have the numbers here. So
it was 55 point. Well, no, I'm just curious where the inflation ticking up, like you mentioned, to 3% versus the 2.8% estimate. Where was that from?
That was from the University of Michigan survey with the inflation. That was in the 5 to 10 year range.
Okay, got it. Perfect.
And then Rivian, we had Rivian last night. Pretty good quarter overall. We got some cuts, some raises this morning on the street. Rivian earnings, if anybody missed them, they missed on EPS. It came in as a loss, $1.62. Estimate was for $1.61. Revenue beat $364 million. Estimate was roughly $335.7 million. Adjusted EBITDA loss, that was a miss. Came in at, I think, $1.31 billion. Estimated loss was $1.23 billion. So everybody's talking with the Inflation Reduction Act and what the tax credit is for Rivian. Now, they did release a statement and basically saying after the Inflation Reduction Act is passed, you have to get your thing locked in because vehicles are over $80,000. But if you do want to get that tax credit in, $7,500, you should probably get your vehicle. You should probably get that locked in before it expires.
Yeah, and I think going back to your point about why, why call this the Inflation Reduction Act, I'll give you a few things there. So, I think just nature of politics, right? You got to imagine. So, this sort of actual I would consider it more of an infrastructure bill, right? Spending bill is actually very popular among. Really, people know we need to invest more into our infrastructure. I mean, this is something that even Trump talked about doing. But I think what you're seeing politically is obviously right now for voters, inflation has been the number one thing that people are worried about heading into midterm elections in 2022 or here in November. So they're saying, okay, hey, why don't, while we're passing this big infrastructure bill, why don't we just call it Inflation Reduction Act? Because that's the thing that people are really worried about. So I mean, that I think that's just how the nature of politics plays out. They're gonna make things sound, try to sound as good as they can. I will say, and like you said, some of the things won't kick in until 2025. I believe one of those things is the cap of $2,000 a year for medical purchase for Medicare patients, something like that. Some measures like that actually, when you break it down, it does cap price increases of something like healthcare. So it's not going to do anything for inflation across the board, but you can at least make the argument that, hey, in certain areas, it will keep prices from going up.
Well, yeah, but to that point, there's a couple of big people come out. The CBO, the Congressional Budget Office, a school in Pennsylvania. There's been some schools that came out and said, hold on a minute. I mean, even Congress's own budget office even come out and said, hold on, wait a minute. We actually don't think this is going to reduce inflation. It may tick up a little bit. So, I mean, conflicting parties in Congress and in the Senate and in the House, but it was just something to dawn on. But really for yesterday too, before we were chatting yesterday, Disney, after they reported earnings, something interesting to note, Aaron, is Disney CEO Bob Chapek was actually on CNBC yesterday, and he said, streaming growing phenomenally. He said streaming results ally industry fears. And something interesting he said on the park and industry theme park area, he says he sees no softening in theme park demand. If demand goes up, that's an opportunity to raise prices.
Yeah, and I mean, I don't know off the top of my head, but I already imagine that tickets to Disney World are more expensive than they were before COVID, or maybe, especially during COVID when maybe demand was a little bit lower. But the demand for parks and travel right now is there. I mean, I went to Orlando for the first time. I didn't go to Disney World, but I went to Orlando for the first time in October 2021. So this is like, we were not out of the woods of COVID yet. People were still worried about it. And the airports and everything were packed in Orlando because everyone was going to Disney World. Like, I do think with Disney right now, the parks seem strong. Streaming we know is strong. I don't know really why this thing is still, almost 50% off its highs.
No, I mean, I think the travel numbers too, just to indicate how strong it is. I mean, we continue to see 2 million people get checked through airport securities each and every day. So I don't understand how airline stocks aren't doing well, how airline companies aren't doing well. I don't know how they're not benefiting, because we're seeing 2 million plus. We saw it yesterday. We saw it Tuesday. We continue to see people traveling. But just to switch here, I thought it was interesting. Susquehanna Financial Research came out yesterday late afternoon. And two headlines, two key parts of that actually caught my attention, and it was a headline on a few areas. They say lead times for semis narrow for third straight month. Shortages of some chips continue despite overall improvement. And so, I mean, continuing to see some improvement, but then we have to ask ourselves, if inflation does go back up, and are we still seeing supply chain shortages? How is that really going to come back? So just interesting how they come out and say lead times for semis narrow for the third straight month. That's some good news. Hopefully we'll see some improvement, but anything is possible. I'm eager to hear what their next update is on semis, because semis are very hard to get. I mean, look, Apple come out with a warning yesterday late afternoon that was kind of concerning on a little bit. They say expects to sustain iPhone sales in 2022 as market slows. Assembles expected to make 220 million iPhones in total for 22. Apple partners will assemble 90 million new iPhones, on par with 2021. As we continue to see with this Susquehanna Financial Research with semis and Apple with their products, it's going to be, I'm eager to see what happens as we get into Christmas. Is people want new phones, trade them in. We'll really see if we'll be able to keep up with the demand.
Yeah, I mean, I think the semis is something that we've been watching closely, really. I think, if you're in the semiconductor industry or the supply chain industry, no one talked about you, 3 years ago, but during COVID, you became like the most hot button issue, because we really found out, or everyday Americans found out, oh, I guess these semiconductors that we're going through a shortage of now go into everything. It's not just computers, it's cars, it's refrigerators, it's your washing machines. It's basically everything electronic now uses these semiconductors for the most part. And so, like you're saying, that there are still some shortages out there, but the time it's taking for companies to get them into their hands is going down, which is a good thing.
Yes, but are they going to be able to keep up with demand? I'm eager to hear. I mean, Whirlpool with some issues, and just as we get into the Christmas, as we get into the holidays, look, we saw that report yesterday circulate that Microsoft is laying off, or LinkedIn, they're laying off some employees with the LinkedIn side, with like the advertising team. So that was something interesting. But to go back to the semis real quick, as we get into the Christmas, I'm eager to hear what these companies are saying as they report Q3, Q4 earnings, what their outlook is for Christmas. Are they going to be able to keep up with demand? That's a fear that I have, that maybe not all companies will be able to.
Yeah, I think right now, honestly, there's more fear of demand lowering, or than companies not being able to meet demand. I do know that we had a bunch of companies in the semi space come out and say, okay, we're moving kind of more from having shortages to now having some inventory. I like you said, I don't know if that's across the board. But what I think is so interesting, I remember, not you and I, but we, as in like the financial media, were discussing this when the Fed first started raising rates. There were some economists out there that were saying that could actually not hurt inflation overall, because obviously as you raise rates, you're going to bring demand down, which is going to help inflation. But what we saw during COVID was certain things really driving that inflation. And before it was, you know, gas for a lot of it, it was cars. It was new and used cars, and you know, U.S. manufacturers, Ford, whoever, they were all kind of cutting their numbers, saying, hey, we don't have enough chips to produce all our cars. So there were economists out there saying by raising rates and slowing down investments, because that's a byproduct of raising rates, there's going to be less money just flowing around in the economy into investments. It's more expensive to borrow money, so companies are less willing to take on more debt. But by raising rates, those semi companies aren't going to be able as effectively then to tackle some of those like supply issues, and could then keep car prices higher for longer. It was just an argument that like some people were making, kind of counterintuitively, how raising rates could hurt inflation in certain areas.
Right, and we're going to have to see. I mean, we got comments yesterday. There was some Fed speakers. We had Tom Barkin on this morning on CNBC at 10 a.m. saying he wasn't really sure where he was going to lie in September, where he was going to raise rates. We had Fed's Daily on last night on a Bloomberg interview around 7:30, saying right now her baseline is for 50 basis point hike in September, but she does have an open mind if 75 basis points will be needed in September. She's not really sure right now. She says for today, with the numbers in hand, I think 50 basis points is the case, but open to 75. She says that we are a long way from risk of recession. She reiterated 50 basis point makes sense to her right now. She says she doesn't see rates becoming, she sees rates becoming more restrictive next year. You know, just basically echoing what every Fed member says.
Yeah. And that's really right now, right? I mean, we can talk about, you know, the Michigan consumer sentiment or this or that, but really, I mean, the Fed's going to determine the direction of this market. And I think right now, what you're seeing is a lot of people and seemingly the market pricing in the chance, at least, that we're not going to see, you know, the 75 basis point hike on the next one. We'll go back to our good friend, the CME watch tool here. And this is for September's. So this is actually going the other way now. Today, so let's see. So yesterday, this was 57%. So this has actually been going down. So the day we got the CPI report, it was giving us like a 65% chance, like somewhere up here, that we were going to get a 50 basis point hike. But that probability is actually lowered. So it's about 50-50. It's about a coin flip the CME is giving it for the September meeting if we're going to get 50 or 75 basis points. Honestly, I don't think it matters between those two. Like the market will react negatively in the short term to the 75 versus the 50, but it's going to matter more, you know, over time what the Fed is doing, you know, and their tone over time, not just this one specific September meeting.
Right. I think we get, one more jobs report before the September meeting. I think we get August's jobs report. And then I think we either get one or two or more CPI reports or whatever reports in. So I really think those are going to be key to watch as we look forward. But, you know, anything is possible. We continue to have Fed members come out saying different things. Next week we have some Fed members. We get, I think next week or the week after, we get the July 26th, 27th FOMC minutes, the meetings or the minutes from that meeting. So I'm eager to hear what that has to say.
Yeah. Sorry, I see someone asking about ChargePoint in the chat. Let me go ahead and get my Benzinga Pro pulled back up, and we'll look at ChargePoint real quick. I've been loving these clean energy names, obviously getting the boost with the Inflation Reduction Act and different things, but you know, clean energy has been hot. We can look at the TAN, the TAN, which is your solar ETF, but ChargePoint is basically I don't think I might literally have one share of ChargePoint, honestly. I kind of forget. Damn. ChargePoint's having a day. Up 13% on the day. Why is it moving? Shares of several EV and charging companies are trading higher in anticipation of the House to vote on the Inflation Reduction Act, which includes funding to address climate change and promote clean energy. Yeah, I mean, and some other names, you know, watching. We've talked about Array, talked about that one yesterday. Sunrun is another one of my big ones in the solar space. I mentioned the TAN ETF, or you have the iClean ETF too, ICLN. So you have a lot of different opportunities to come out here and try to play this clean energy. Do you think, Nick, there are any like specific companies that impress you in the clean energy space, or any things that you've been kind of watching?
I think just the overall sector. I mean, we've seen a lot of, I don't want to say we've seen a lot, but we've seen different industries, clean energy, some of the solar names really benefit from this Inflation Reduction Act, this bill. And so the House is expected to pass it today, and it will head to President Biden's desk sometime next week. I don't know where he's going to be signing it. I'm not sure if he's going to be at the White House or where he's going to be, but he's expected to sign it sometime next week. So we're going to have to see how these names play out. But Aaron, going back to Rivian, there were some interesting PT changes today. RBC went from 77 to 75, DA Davidson 24 to 27, Wells Fargo 30 to 35, Wedbush goes from 40 to 45, Piper Sandler goes from 108 to 83, and Mizuho 70 to 65.
I mean, yeah, I think right now, I think analyst ratings have kind of lost some of their weight. You know, it used to be like, especially the big ones, especially your JP Morgans, your Goldman Sachs, would really have influence over a stock. I don't know how much that really matters anymore, but it is on something like that, Nick, when you have all the different banks all kind of, you know, bumping up those price targets outside of the one that went from, you know, 108 to 73 or whatever, which even that is still more than 100% upside from here. And especially right after the earnings report, right? They're looking at data from the company saying, oh, this actually looks stronger than what we had initially thought, which is interesting because if you look at the market reaction to Rivian's earnings, it actually went down, or actually this was this morning, and then came back up. So kind of interesting there.
Yeah, and something to note too, Bespoke Invest, while we're on earnings, I come in with another stat here. This was interesting. So this is for this week from 8/8 to 8/12. Bespoke Invest tweets this morning. This is quietly been an awful week for earnings. Only 57% of companies reported have beaten EPS and sales estimates. Had been 70+%, and 1 out of every 5 companies have lowered guidance.
Wait, 1 out of 7 companies has lowered guidance, you said?
1 out of every 5 companies have lowered guidance.
Oh, okay.
For this
interesting.
Now, well, yeah, the next week we get Target, we get Lowe's. So I'm eager to hear what they say on supply chain, what their inventory gluts are. So we're going to have to really look for those too and really see how this stat updates for next week to see if Target comes out with some kind of, you know, warning after they report earnings saying, I don't know, we may have to slow down here. So we're going to have to see because back to school is going to be in focus. So we're going to have to see when they report saying if back to school sales have been incorporated just yet.
Right. Yeah, and I mean, right now, like, you just have to realize, like, there's just so many different headlines people are looking at, and I feel like because people are so divided, right, I've seen so many people so bearish, right? Like, if you're bearish right now, you're probably going to see, you know, you're going to end up, like, we all have confirmation bias, so you're going to see the data points that are indicating, you know, the things that Michael Burry are sharing that's saying how bad we are. Whereas I'm going to sit here and say, like, all right, in the last week alone, going back to last Friday, we've found out that we added 500,000 jobs in July, crushing expectations. We found out that inflation, that prices did not increase at all in that month, which is why the market was down last Friday, was because, well, multiple reasons. Because we saw the wage growth was part of the thing, and then usually when there's wage growth, that means there's still inflation. So there was, you know, people anticipating, okay, the Fed's going to see this, and then, you know, have more reason to continue raising rates. So we crushed on jobs numbers. You had prices didn't go up in July. You have consumer sentiment rising faster than expected. And, you know, all those things are true. But then there's still other things out there that, you know, could indicate you to be bearish. So what I'm saying is it's like always there are different data points and you can pick and choose. But for me, like, it's just hard, I think, to get these data points that are bullish, the ones that I just mentioned, seeing the market reaction and then saying, oh yeah, no, I'm still short. Like, obviously the market's liking what's going on right now. It's liking the bill. It's liking, you know, it's liking the fact that inflation's falling. It's liking the fact that we're still adding jobs. It's liking the fact that maybe the Fed doesn't have to, you know, whatever the Fed's dot plot target was for 3.5% or 4%, you know, maybe they don't have to get all the way up there. Who knows?
And maybe it's liking that S&P 500 has retraced half of the 2022 drop.
What was that? Sorry.
I said maybe maybe we're liking that. Maybe investors and traders are liking that the S&P 500 today retraced half of the 2022 drop. We got above 42.31. That was from Jan 8th, or from the Jan highs all the way down to the June lows, and we're back above 42.31.
Yeah. No, and right. That's what I'm saying. Is it's like it's hard to look at the market, to look at how it's responding to everything that's happening, to all the data we're getting, and saying, you know what? No, like I'm going to go short here. Again, we don't go. Nothing goes straight up. So like as this continues climbing on this pace, you're going to get a pullback. You're going to get red days. Like we'll probably have, I can see here going back to the end of July, 1, 2, 3 red days in a row. We haven't really had that in the past 2 weeks since then. So I expect to see a pullback at some point, but the question is really, are you going to come back and test these lows, come back to 366 in that we got in mid-June, or not?
As of right now, Wall Street and many banks is saying, I don't think we're going to retest the lows. And I even think from that perspective, I don't think we're going to retest the lows just because of all the good data we're getting. We got a better than expected jobs report. We got a better than expected CPI report. We got a better than expected PPI report. And we got a better than expected University of Michigan survey and the consumer confidence number.
Yeah. I'm seeing people in the chat saying they're bearish. Shelly's saying there's debt crises everywhere, both consumer and countries. Basically saying, and that's what I'm saying is if you're bearish, like you're going to see things like that make you more bearish. If you're bullish, you're going to see like, I'm bullish. And I also like Quantum. He's saying I'm bearish. That's why I'm 98% cash. If I were bearish, that's how I would do it. Cause like you'd be losing money right now if you were shorting the market, if you're buying puts. So at least if you're holding cash, you're not losing money and you can buy any dips. And I do think, to Shelly's point, some of the concerning things, at least for me, she said every time I look at data, it's gloomy. I do think there is a lot more concerning data coming out of Europe than the U.S. right now. And basically with that in mind, with that being true, if the European situation is a little bit more dire than what's going on in the U.S. right now, that can mean a lot of things. But I'm going to lay out two scenarios. One is that the problems in Europe, whether it be energy crises, inflation, whatever, if that leads to some sort of like big recession throughout Europe that then carries over to the U.S., some big global headwinds, that could have an impact on the U.S. market. But the flip side to that is that if the U.S. economy and the U.S. market, U.S. equities are showing relative strength against the other economies in the world, that's going to attract more global investments, right? Places like Japan's SoftBank, places like, whatever, are going to see, the U.S. is actually doing a lot better than France and Germany right now. We were going to put, 50 million into that French ETF fund. Well, why don't we buy the U.S. small cap fund instead? So that is also a scenario where when you're showing relative strength, can actually be more bullish for the U.S. market, if it's performing that much better than what's going on in Europe.
Right, and I really think we're going to have to watch as we get into the winter and dark days ahead. I really think Europe, bless you.
Sorry.
I really think we're going to have to watch because we're going to have to see how Putin does with the gas. We're going to have to see how oil goes. I mean, look, oil's been bouncing all over this week. I mean, look, gas prices at my local station are basically unchanged. They really haven't budged ever since we got down to below 90, like 87, 88. Gas prices in my local station have been $4.29 now for 5 days in a row because oil has been so volatile. It went back up to 92 yesterday. Now today it's below 91. It's below 90-ish. And so gas prices remain unchanged. So we're going to have to really see a lot of volatile. And I mean, look, Wells Fargo basically argues that. It says gas prices nationwide average more than $5 a gallon in June. In recent days, that price has dipped below $4. The relief comes amid a modest bounce in consumer sentiment from what was an all-time low in June. Near-term inflation expectations have embedded, but longer-term price expectations are worsening. We take little solace in the slightly better sentiment figures because they say the title is "Don't Mistake Relief at the Pump for General Improvement at Sentiment," because as gas prices are high, there's a lot of demand is backing off, but as gas prices are low, demand is going to be continuing to go upward. So really, we have to try and balance out how we're going to have to play that.
Yeah. 100%. I couldn't agree with you more, Nick. Well, all right, Nick. We've had you on for about 30 minutes. I'm gonna let you go here. Let me know if, or before you go, if you've got any other things you're watching, maybe things on your radar for next week. Let me know where you're at.
Well, I do want to just say right now, Bloomberg is reporting regarding Peloton to cut 800 jobs, outsource deliveries, and close some stores. That headline just crossed my feed here. But no, next week, I'm going to be watching Target. I'm going to be watching the major retail earnings to see what they say, how they do on EPS revenue, what they say on inventory. With the supply chain issues, really going to see how that has to shape up. And I'm going to be gearing to go back up to school in 2 weeks here. So I start the 25th, Thursday, August 25th. So I got to go back to school shopping. So I already did a little bit here and there, but no, I'm gearing to go back up to school. So it's going to be last few days of summer for me as I get back into school mode.
Awesome, man. Well, good luck on the school. I'm hoping, that we still get to get, I'm glad that you said we're still going to be able to get you on the show somewhat when you start school. We might have some exciting announcements next week. But Nick, enjoy the rest of your Friday. Enjoy your weekend, man.
You too. Have a great weekend and relax, enjoy. And, we're getting close to the dog days of summer where we're winding down and pretty soon it's going to be winter. So enjoy summer, enjoy the weekend. Thanks for having me on once again.
Of course, always, Nick. And I'm going to drop that Twitter in the chat. News by Nick on Twitter. Everyone go give him a follow. Great follow on Twitter, as well as just a well-spoken kid, good-looking, well-dressed. He's going to be a star. I'm going to watch him on CNBC one day. I'm going to say, hey, I remember when I had Nick on my show. That'll be my little contribution to CNBC. All right, guys, quick show notes for the day. 12:30 right now. We typically go to 1 p.m. We might end up wrapping a couple minutes early today since we don't have a show after this. But before we do that, we're going to play some exciting Benzinga trivia. If this is your first time, we'll explain how the game works. I believe today's game is slightly different than how we've done trivia in the past, where it's, instead of typing in the numbers that corresponds with the answer, I believe you're going to have to type out the answers today. But, let's, we also are going to give out a free piece of swag. What was that? Oh, we're starting already? All right, let's do it. Swag-wise, I did go through the spreadsheet last week. There were a few people who I had missed who were missing their swag. On the way now. So if you're missing swag, on the way now, unless if it was from like a while ago, there's a chance that also got slipped through the cracks. So let me know in the chat. See, Born to be Free saying don't believe it, but David Lynn saying got my swag. Oh, Buglog saying, yeah, see, Buglog, you were one of the ones that I sent out last week. All right, how many stripes are there on the American flag? All right. Oh, man. All right, I'm playing as Benzinga today. No one else plays Benzinga. Is anyone else playing as Benzinga? I like to play from my personal YouTube. But today, I'm just going to play from Benzinga's. Shout out. First answer that I saw correctly in the chat was from Buglog, 13. 13 stripes to represent the 13 original colonies. And then 50 stars, of course, to represent the 50 states.
Question is, how many red stripes?
How many red stripes? Oh my God, I did not read that. Holy cow. All right, Enver, you trick questioned me. God. How many legs does a spider have? Don't different spiders have different amounts of legs? Man, I can't believe I messed that one up. Oh, hell yeah. I didn't know we've got Antonio Costa in the chat. Antonio, I love following you on Twitter. I think if you're, yeah, I follow you. Here, wait. And Tony, I'm gonna drop my personal Twitter in the chat. If you don't mind giving me a follow. Big fan of yours. We've spoken before in the DMs. I think I've tried to get you on the show before, but... how many legs does the spider have? Correct answer is 8. Shout out everyone who got that right. All right, when was the first model of the iPhone released? Oh man. I'm gonna say... I guess 2006. I know it's somewhere in between 2005 and 2007, I'd say. I don't think it was 04, Tiny Pie. I think it's a little early. I said 06. I remember... How would I say I was in, like, 4th grade? Say I was maybe 10 years old, 07 maybe? All right, I'll drop my Twitter in the chat there, at AaronBree5. Oh, 2007. I was 1 year off. So 2006. Real question is, when did the first iPod come out? Probably like 99 or something. How many weeks are in a year? Oh man, these are easy, Enver. Except for the trick question on the stripes. What's crazy to me is how quickly this year's flying by. Like, it's already almost... the fact that, like, we're going to be celebrating 2023 in a few months is crazy to me. 2021 or 2022 feels like a couple days ago I was celebrating New Year's. Oh, that music's getting a little loud. I like it. Oh no, get these oh, Shelly, get these spammers out of the chat. I know you, oh my God. All right. Enver must have heard me say these questions were getting easy because he gave us a hard one. How much saliva does the average human produce in a lifetime? In gallons. Oh man. I'm going to guess. I have no clue. Like, literally, I have no clue. Antonio Costa's guessing 1,000. I said 297. Mitch said 227. I'm thinking about a gallon. I feel like a gallon a year. I feel like that's... No, probably more than a gallon a year. Oh my, it's so much more than we thought. Because it's not how much like you spit out, it's how much you produce. So you're probably swallowing like a lot of that. 10,000. Holy shit. Oh, Jesse, I did hear that too. The earth is spinning too fast. So maybe that's why the year has felt shorter. But yeah, it's so weird. I guess there's some guy's job in some like mountain in Tibet to time when the... I'm just kidding. I don't think it's actually someone's job. It's probably all like digitized. But they measure when the earth completes its cycle. And like a couple weeks ago, it did it in like 23 hours, and it went too quickly, like by a second. How many black keys are found on a traditional piano? Oh man, I used to know this. I'm gonna follow Shelly here. 36 sounds right. How many total keys are there on a piano? I mean, do we have to be concerned if the earth is spinning a little bit fast? Is it gonna make it more like windy? Is it gonna make it windier? Maybe we should get a scientist on sometime. talk about some stocks. 88 total, 36 black. So you have 52 white keys. 52. So is it one every 3 white keys? There's a red or a black key? Or no, I feel like they're only in the middle, right? Or is it every third is a black key all the way across? Why do you guys know so much about pianos? All right, the Aztec people sacrificed about how many people each year? I don't know why I laughed when I read that. Kind of a ridiculous question if you ask me. How many the Aztec people sacrificed about how many people each year? 20,000, David Lynn is saying. Holy cow. All right, I'm going to go 650. Oh, Pickle Jim, we were on. I was thinking maybe 660. I have no clue. How am I don't know. I really don't know. This is great though. I kind of like getting the trivia questions where you have no. Oh my god. What? 250,000? Is that true? Born to be Free. I mean, man, you knew that they. What? Can someone fact check this for me? Shelly, Tiny Pie, someone out there, fact check this. How did they maintain like population growth? Elon Musk would shit a brick if he saw they were sacrificing that many people. All right, the ancient city of Rome was built on how many hills? Oh my god. Again, I don't know. TMT, Money Bitch said. No, they did not play around. Certainly not. All right. It's obviously 7. You guys are all smart and know this. There's got to be some like significance of this, right? Like the 7 hills of Rome. I don't know. I've never. Man, you guys are making me feel dumb today. Whether it's history, whether it's science, making me feel silly. Although I do not feel silly for being short, because I'm not short. And I think a lot of the people out there that are short are feeling a little bit silly. What, Shelly? Why'd you say OMG, Bree? Joel said COVID. I don't know what that means. Is that Joel O'Connor in the chat? Man, all right. Shout out to our winner, Sneaky Juan. Wow. Shout out Shannon, 2nd place. Woo! David Lynn, Antonio Costa in the 4th place. Antonio, man, I usually don't do this, but big fan. Would love if get a follow on Twitter. And drop it again in the chat. Sorry for doing that. Again, I usually don't. But hey, who doesn't love a good shameless plug once in a while? All right, Sneaky Juan, email me, shows@benzinga.com. Low blow. The data from Jonathan, you're making me laugh. The data from this game is clearly a lie. Yeah, that was kind of a low blow. Look, I like, here's what I'll say. What I like about people that are short right now, or people that go short in general, is the one thing that irks me the most, I think, is when people, you know, on Twitter or whatever, if they're saying like, oh, this market sucks, the market's not going up. I remember there was one guy specifically who like tweeted something like, I'm starting to think the market's like never going to go back up again ever. And then someone was just like, then short it, smarty pants. Like, you have as much freedom to go short as you do long. If you don't think the market's going up, then go short. So at least the people that are short through investments, through trades, are putting their money where their mouth is. They're not just out there saying, no, the market's shitty, it's going down. They're putting their money where their mouth is. They have conviction. So I do respect that. The other part, though, is I've gotten, and this is probably more of a indictment of me and my like Twitter feed or whatever, but the people that I have on Twitter and see on Reddit that are short and stuff have gotten I don't want to say like annoying is the right word, but like like very combative, right? Like literally not people weren't even talking about trades or anything, and they were just responding to things about like the CPI, saying like no, that's actually bad that prices didn't go up in July. Like this makes no sense why the market's up. It's like no, the market's up because yes, we still have inflation. Yes, it's still prices were 8.5% higher than they were the July of the year before. But is that not still good news that the prices didn't continue to go up, right? It's someone laid this example out that I really liked. All right, let's take a weight loss scenario, or weight gain, right? Weight gain in this scenario is inflation, right? Prices going up, weight going up. So say you go from last July to 200, you go from 200 pounds to 217 to June. That's an 8.5% increase. So you've gained 17 pounds over 11 months from last July to this June. You've been consistently gaining weight every month. You try, extra hard in July. This would be the Fed raising rates. The rates getting as higher than they've ever been. So now in July, you're working out harder than you've ever been. And you didn't gain weight that month. You're still 217 after that month. Would you be excited about that if you had gained weight every single month leading up to that, and then you didn't that month, that you were able to maintain? I would see that as a step in the right direction. I wouldn't see that as a bad thing, certainly. So again, I guess I've gotten irked by like certain bulls on my feed or bears on my feed. Again, that's not an indictment of anyone here, because I actually respect the people that are short with their money more than people that are just out there saying, oh, the market's going to go down, the market's going to go down, and then they're not, short. I'm 411 screw. Hey, Shelly, I'm short too. I want to recheck on the Aztec number sacrificed every year. All right, let's do that. Oh my God, Shelly, stop sending these spammers into our chat. Gee whiz. Yeah, but the equivalent to what's happening in the market is taking 12 cheat days in celebration. You're good, Jonathan. You made me laugh today. I'll give you that. That's a good point. That's fair. I can't really... I don't have a comeback for that. You're right. I'm not saying... And that's why I think the Fed is coming out... like there were all these tweets and stuff of Bed Bath & Beyond up at 100% over 5 days, and they're like, are you guys serious? Like, the Fed is trying so hard here to raise rates and to stop this shit. You guys are gonna fucking pump Bed Bath & Beyond up 100% in a week. Powell's gonna see this and hike rates to the moon. Wait, did you actually, Shelly? Shelly's the bot whisperer. All right, what was I gonna do? All right, before we wrap up for the day, because I did mention we probably will end up ending a couple minutes early today. How many people did the Aztec kill? Yeah, I'm seeing 250,000, man. I mean, shoot. I've known I was lucky to be born when I was born, where I was born, but man, am I glad I wasn't born in the Aztec. How many people do they have? Let's do some more research into this. Human sacrifice in the Aztec culture. Oh my God. Some post-conquest sources report that at the reconsecration? Am I getting that word right? Of the Great Pyramid of Tenochtitlan? In 1487, the Aztecs sacrificed about 80,400 prisoners over the course of 4 days. That's 20,100 people a day. This number is considered by Ross Hasig, author of Aztec Warfare, to be an exaggeration. Okay. Between 10,000 and 80,000 persons were sacrificed in the ceremony. The higher estimate would average about 15 sacrifices per minute during the 4-day consecration. I mean, holy shit. That's some intense shit. OP, I know the Fed's not actually looking at if BlackBerry's up or down to see if that's how they're making decisions. It was just a funny joke on Twitter. People are saying, really, like, while we're raising rates and trying to, take froth out of the market, we're going to pump up AMC and GameStop. Oh, okay, shoot. Here, I'll go back to the page. David Lynn wants me to... I mean, it sounds like either way, when you Google it, that first number that pops up is 250,000. I don't know if that makes it true. But yeah, David Lynn's point argues that a claim by Don Carlos Zumaraga of 20,000 per annum is more plausible. Other scholars believe that since the Aztecs often tried to intimidate their enemies, it's more likely they could have inflated a number as a propaganda tool. I think that makes a lot more sense to me. Because, I mean, think about it. Like, population size-wise, it was like, if you look at a chart of, let's see this, world population chart over time. And keep in mind, I want a chart. I want like a picture. Yeah, so keep in mind, they were talking about the 1400s here. So this chart isn't even going back all the way there, right? There weren't that many people. Like, I don't believe that they had enough people to kill 250,000 people a year. That would make a lot more sense that if, like, in those days, you could just say whatever you want. So if if you're the Aztecs and the Mayans are over here and you're like, oh yeah, we, the Aztecs, kill 200,000 people a year. We're crazy. You should be scared of us. The Mayans would be like, oh my God, these guys are scary. They have no way of fact checking it or knowing if it's true or not. I'm bearish on the 250,000 number. Oh, David. You just said the quiet part out loud there. Man, oh man. I might have to take some titles off your belt. Pull up a LiDAR survey of the American jungle. There were millions living there. Roads lead to many cities. I'll be honest with you, Born to be Free. I know what LiDAR is. I feel like we were talking about with like Teslas, with EVs. I don't really know. Pull up the LiDAR survey. I don't know what that means, really. I'm not debating it. I guess look, I could be wrong. They could have been killing 250,000 people. I'm just saying, if you had to make me guess, over under 250,000, I'd put money on the under. I'd say, hey, maybe it wasn't that high. I'm sure they still probably killed a lot of people. Max Ground Survey, Central American. All right, folks. That will be a wrap for us for the show today. Thanks for hanging out. Like I said, it's been a pretty fun week with different economic data points we've gotten, different big market movements. Next week, we will not have a show on Wednesday. We will have a show on Monday, Tuesday, Thursday, Friday. So make sure you stay tuned. Just want to make sure we're throwing that out there, that we are not going to have a show on Wednesday. We have a little company outing. But I hope everyone has a great weekend. Smash the like, drop a sub, subscribe if you haven't, drop a follow on Twitter, dropping that in the chat one last time. Look it up, AB. I will. I'm going to look up the LiDAR survey of Central America. Jonathan, I agree. It was a fun show today. Again, have a great weekend. See y'all on Monday. Love you guys.